Hi everyone. So it has been time since I did the last commentary. Today's commentary will be slightly different. It will not be about trades I've taken. It will more so be about a model that I followed during London Close. This model happens every single day, except for I believe the start of the year when the markets are the timing of the market is shrunken down, or during other times or season or holidays. But other than that, this model is quite consistent. So I have to give you a few warnings before I disclose this model to you. The first thing is deciphering this model requires you to have understanding of the 8:30 open price and the midnight open price. Not every day will price revisit these levels during London close and repel price like a PDRA. So some days you will have London open trading close to the daily open price and then price dropping down, and then you will have obviously the 8:30 open price during New York, and then you will have a drop, so price will not be close to either of those zones. So these days you trade differently to how you trade days where price is very close to the 8:30 open price and the daily open price during London close. Those two are slightly different days, and you need to know what to do in those two scenarios. Okay. All right. So London close starts at 10 a.m. New York session every day, and it closes around. You can stretch it up to 12 p.m. New York time. So with this model, it requires you to know when price has made the last Judas swing. Was it during the London Open? An example is the London Open taking out the Asian high and using it as a Judas swing to drop price. That's an example for this day. Or it could be the opposite, which means London Open dropped lower, taking out the Asian session low, confirming that Judas swing, and then price is higher, and then price is trading higher for New York as well. So that's two different scenarios. And the opposite could happen as well. Price could stay within the range of Asian session, and then New York causes the Judas swing, and then we're trading lower for London close. So these are two different scenarios that you need to keep in mind. And also, you have to have a frame of reference on the 15 minute, which is the 15-minute highs and lows. You need to keep in mind where the highs and lows are for the 15-minute time frame. Okay, cool. And also you need to have a frame of reference of the 8:30 open price and how that like what has that done to price after the news gets released on 8:30. Has price stayed within the 8:30 open price, within that range, and then when London opens, did it stay within that range, or did it, like this day did it drop considerably, and then London close was some sort of a sorry, a retracement. Okay, so you need to have in mind the 15-minute highs and 15-minute lows of both sessions. You need to know those, and what price has been doing. You need to have an idea of those. Okay, last thing is you need to know London close either does one of these one of these, I think, four things or five things. It either follows the established trend of New York. So if New York was bearish, it will either continue being bearish for London close, or it will be a reversal of New York. So if New York was going down, the London close may have hit a level of interest to the left hand side, and then it starts reversing the day's trend. That's obviously very different to when New York is reversed, or when New York causes the reversal and then you continue, and when New York is just following the London Open trend that was established. Okay, these are two different scenarios that may lead to you getting different outcomes, and I will probably show you examples of those. Okay. All right, let's go to today's example and I'll break down this trade for you. All right, so today's price traded here, traded below the lows. This is your significant low, or your significant 15-minute low that's formed. That's the London Open of yesterday. We traded beneath that during, remember the time, during New York. We've been trading lower ever since, because we've confirmed the Judas swing during London Open, so we've been trading lower. That means London Open is trading low, New York Open is trading low, and therefore you need to ask yourself, where can we target? Obviously this low, because price is very close to that low, and the draw on liquidity is this low. Okay, so price was gonna trade to this low, and I've outlined that in the Discord. If we go to Discord here, I've said the low of Thursday are currently the draw on liquidity. When Fed Powell speaks, they use interest rate and other things, or obviously he will talk about those things, and then the volatility from this manual intervention will take price down to the low of Thursday. And I've actually taken this trade and I posted it on YouTube. You can find it there. Okay. So this day I knew it, because these lows, they confirmed equal low. They made equal lows. So New York low here, and this low on London Close for this day, they made relative equal lows. Okay, let's go down to the 5 minute, and I will show you how I came with this conclusion. So you see it drops back down. I'll just remove this indicator for once. Alright, it drops back down, creates this low, and this low is literally 3 pips away from purging the low of the previous day. And we had this level of order block that we revisited many times, but we rejected off, and I knew that we had equal highs, but sometimes equal highs are left behind to be revisited back in the future, not just now. You know, it doesn't have to go above the equal highs now and then reverse. It doesn't need to do that, and that's something you learn with the experience. Okay. So let me turn the indicator on again. I'll show you. Alright. So when was that low traded into? It was traded into during London Close, and we traded higher. And I was using the range of this high and this newly created low. If you get the fib from this high to the low, the 50% is around this level. So you could be selling it from there. Alright? Cool. Where does mini Judas swing occur during New York? It occurs here, right here, with this high. Right there. So this is a mini Judas swing. Okay? We have 2 Judas swings now. This Judas swing on London Open, which dropped price, and also New York went below these highs and confirmed the Judas swing. So we have 2 15-minute highs right now that we've confirmed a Judas swing on. So the high here and this high here, and we dropped lower, and we confirmed here to be equal lows. Okay. Once we trade up, we could be taking the sells, putting the stop loss even on these imbalances up here, or fair value gaps up here. You could be putting the stop loss there, and then you target the equal lows. Okay, so this is one scenario where you have the Judas swing in the morning, and then Judas swing in the afternoon, and then obviously you're not going to have any reversals during London Close, because you already had 2 Judas swings during the London and the New York. So why would you have another Judas swing here taking out these highs? What was the purpose of these Judas swings if it was going to be taken during London Close? Of course, there's no point. And also, Judas swings confirm weakness on the opposing side of liquidity. So with this instance over here, the opposing side of liquidity is the buyers, obviously. So why would it create these Judah swings above these highs and then drop if it wanted to break structure and then rally in the future? There's no point. So the fact that you have two Judah swings in the morning just means we're not going to have a reversal during the afternoon, and we'll probably continue that trend that we already established during London Open and New York Close. Or New York Open. You can call it New York Close or whatever. Okay. This trade had around 6 pips stop loss and obviously 30 pips, 1 to 5 risk reward, targeting the low here. Okay. Alright, so that's that for that day. Cool. This day is very different over here. I'll draw the open price on this day and you see the difference. Look at this. So this day's profile is extremely different. What we done was we rallied up during London Open and we rallied up during New York Open. Okay, you need to go up to the 15-minute and you need to see which liquidity that the Judah swing, where did the Judah swing occur, or which swing high was taken out from the left-hand side. So which liquidity was engaged during New York that caused this considerable drop in price from this high to this low here, below the daily open price. So you need to look to the left and see what is to the left that caused price to drop this dramatically. Okay, and we know there's a Judah swing here because of this 15-minute high. Okay, so this one exactly right here. See this high? Right there. That's a Judah swing high. The Judah swing occurred here. Okay, very different to what happened today, which was the Judah swing occurring during London Open. Here, the London Open didn't confirm any Judah swing, rather the New York confirmed the Judah swing. Cool. And this swing high was taken out, and then there's something in here. I think there's a fair value gap or whatever. Yeah, something in here that price reacted out of. Cool. Then we had this dramatic displacement of price lower. Okay. So where is your other 15-minute low that price engaged with when it took out this, when it went lower? It's here. Okay. Is this low right there? So once it was taken out this low, you need to know, very different now, because the 8:30 open price is around, I think, is around up here. Yep, up here, and the daily open price is up, is here. And remember this rule here: 8:30 open price and midnight open price can be used as support or resistance, and this is the type of situation that you have, which will obviously use the 8:30 open prices, the midnight open price as resistance to drop, because we went below it and we created that fair value gap on here. Okay, so you go down to the 4-minute time frame and you want to see what happens once we take out this swing low on the 15-minute, which is the Asian low as well. There's liquidity. You want to have your setups here buying just to target the open price. See the open price, target that. Okay, I didn't take this setup, so I'll just go over it quickly. So you had some sort of break of structure here, retracement down to a order block and then rally up. Okay, I don't think you could have caught this one because there was no significant break of structure, etc. You might have missed it. Cool. Alright, how would you have caught the sells? So when price went into the daily open price and repelled, how you could have caught the sells? We will investigate that. See this high, low, and then a little imbalance or fair value gap that's formed here. We tap into it, and then you can have your sells from that level down. Put your stop loss above obviously the daily open price. and then you target the opposite side of the liquidity. Sorry about that. Yep, right here. Cool. And you target the opposite side of the range, which is these lows. That could have given you around 34 pips with a drop. Okay. So that is different situation to what happened to here, because with here you had the Asian session that was swept, or the manipulation of the Asian session highs, creating the London open highs, and then this stayed as the high of the day. But with this situation here, we didn't have any manipulation during London open. We had the manipulation during New York. So what's going to happen? Most likely London close is going to follow the trend of the New York session that confirmed the Judah swing. So if the Judah swing gets confirmed by the New York session, then why would it really reverse from, or why would it reverse, or why would you expect a reversal during London close when the Judah swing already occurred during London open and New York open? You wouldn't. So in that scenario, you want a counter trend. You want a continuation trade of the New York trend. Okay, so that's the similarity they have. These two trades, the sell here and the sell here, they're continuations of the Judah swing that occurred during New York open. All right, cool. And then I can give you many other examples. I don't think this day could have any entries, anything. Okay, but this one I actually documented it, which is yeah, I documented that already. Cool. All right, with this day, you want to go to the 15-minute and you want to mark out your highs and lows. Okay, we will come back to that later. Okay, you want to measure your highs and lows. So your high, 15-minute high is here, and then your 15-minute low is literally there. Okay, we dig beneath that level, retrace, and then drop. Okay, so what does it mean? There was no Judah swing during London open. However, there was a mini Judah swing during New York, and I'll show you how. See this high there, this 15-minute high right here. We had a Judah swing above it, and then we had this considerable drop in price that took out the sell side liquidity, or that broke structure. Therefore, if we don't have the Judah swing during London open, we'll probably have it during New York open. Therefore, we're not going to have any incentive to go and reverse during London close, because to the left hand side we're not in any significant level, or we didn't hit any significant sort of PD array to the left hand side. Therefore, we'll probably continue going down and following the trend that was established during New York. Okay, and with this we just went down with it. All right, here is extremely different. This day right here, we had a Judah swing above the highs during London open, and then the Judah swing during New York, and then we follow the trend here. So there's a similarity between the open of London close and the open of London close here. There's very extreme similarity because we have the manipulation of these highs during London open. Therefore, we don't need to reverse during London close read. We don't need to do that. Therefore, you could have entries of the PD arrays that are formed during New York, then to go lower. Okay, so these two are very similar, but then when this happens, this rally higher, it means we hit something to the left hand side, a PD array to the left hand side, that caused this displacement or this movement high. Okay, but we'll be out of the trade anyways. Okay, because New York close has finished already. We'll be out with the lows. Okay, I'll give you a few more examples. Okay, so look at this situation here. London open doesn't do any displacement lower. sorry, it doesn't do any displacement higher, taking out the liquidity on the Asian highs. What it rather does is it literally just drops, okay? However, New York was the retracement up that took out the 15-minute high. See that? So when it takes out the 15-minute high during New York, then you follow the trend that was already established by New York, which is obviously bearish to the downside. Okay, I'll give you slight rules for this situation as well. So London Open consolidates around the daily open price, then price moves in one direction, which is down. New York provides a counter trend move that is going towards the 15-minute high that needs to be swept. Okay, so by the end of New York, you're near the daily open price, above the 8:30 open price. So the daily open price is right here. I'll just draw it to you right there, and above the 8:30 open price. What ICT says is if price is above the 8:30 price and you're bearish, and is also and you're bearish, then you're in a discount and you should be selling above the daily the 8:30 open price. Okay, cool. And we have the midnight open price, that line there, which repels price, which is another rule that I mentioned earlier. That if we're trading close to the midnight open price, we'll probably repel price from that level during London close if we're trading in that vicinity. Okay, and you must have a sweep of the 15-minute high before we approach the midnight open, and we've done that. We had the 15-minute sweep. So you wait for I guess the 3-minute shift of market structure, and then you must get relative equal lows. I think you have it there, and you target those. Alright, and one other rule is London close setups can be extended to 3 p.m. if we have a high impact news that's getting released after 1:30. You could extend the kill zone to, I guess, the 3 p.m. That's another rule. Exact same setup here. You can see the daily open price right here. However, we manipulate the Asian highs with this one, but New York doesn't really manipulate anything. Therefore, we manipulate the New York highs, use that during London close, and then we drop back down. So you see the similarity. We're taking out these highs, this high here, and we're dropping. We're taking out this high here, and we're dropping. And the daily open price is literally around somewhere here. So we're kind of repelling, the daily open price is repelling price down. You get me? Okay, cool. This day is very different. What you have is a high impact news release that's getting released after 1:30. For this day, ICT says says there are two different periods of liquidity injection into the market. The initial 2 p.m. red folder news acts as manipulation, which it does here. So that's your 15-minute high getting manipulated during actual London close. So with this situation, you don't get any manipulation during London open, price drops. Okay, we take out this high during New York, but remember, this is when the manipulation is happening at 2 p.m. So 2 p.m. is around, I think, yeah. So the initial manipulation happens then, which is New York, and then in this situation, when you get the 8:30, sorry, once you get the 4 p.m. news release of the FOMC, you disregard the 8:30 open price. You don't use that. You rather use the midnight open price. Okay. For this day only, when you're getting the FOMC news release. Okay. So we run the 15-minute high right here, manipulate it, then dropped. Then you have this fair value gap that you could be trading off of right here. And this is an example of a New York of a London close reversal. This is a very different situation to this one here. And also is above the midnight open price. See that? It's above the midnight open price. And with these days, you don't really use the midnight open price to decipher, I guess, like this. Once you get the 15-minute sweep and then the drop, you don't use that on the days you're getting the FOMC release. All right, let me just change it quickly. Okay. So this is the exception. The days you're getting the news release during that time, which is the FOMC, these rules don't apply. Everything here doesn't apply on this day. It's completely different situation on those specific days. So that's when my model doesn't really give you that certainty, I guess. Okay, this day we don't have any news release, and I believe the highs that are getting swept are during New York session. London Open manipulates, not really manipulates, but takes out the Asian lows, and then the real manipulation happens during New York. Therefore, London close is going to follow the trend of New York, because we get the first initial manipulation during New York, and we follow it up with the London close. And also, we're not trading anywhere near the daily open price, which is down here. So you could enter the trade on the London close and then target the daily open price. It's very different to using the daily open price to repel price, like for you to trade off during London close. With this scenario, you're targeting the daily open price. All right. Okay, so this situation is quite similar to the previous ones. This one, the first manipulation of the day occurs during London Open. Take out the high. This is your 15-minute high then. Watch. That's your 15-minute high. Take it out. Another one. Right there. Therefore, where's our drawn liquidity? The lows. The lows that are relatively equal lows. The Asian lows too. Okay. We take the Asian lows out. Therefore, we use the manipulation that occurs during London Open and also the New York Open for a continuation of the London close. Cool. If we get a manipulation of both times, like the London Open and the New York, then we don't expect a manipulation to occur during London close. We expect for a continuation of the trends that were established on London Open and New York Open. Okay, that's what I want you to take out of this lesson. This one is a typical example of manipulation occurring during New York, and also a shift of market structure during New York, and a reversal during London close. Okay, so you draw your highs, your 15-minute highs, which is this one, and then your daily open price, which is here. Okay, what does ICT say? He says whenever we're trading above the daily open price and we're bearish, we're in a very good discount level and we could be selling it from there. Okay, you can extend that to there. All right, see how it reacts off. These daily open prices are quite important. That's why market is very sensitive to them. All right, we take out we manipulate the highs, the Asian highs, and the London highs together during New York. So when does your first manipulation occur? It occurs during New York. Therefore, when the first manipulation occurs during New York and the change of structure occurs during New York, the London close follows that. Okay, so that's when you get the London close reversals. if we get a manipulation during New York only, not London close, not London open, sorry. Because with the London open, it didn't take out the Asian highs, so why would you consider that as manipulation? You get me? So the first manipulation of the day occurs during New York, and also the lows get manipulated, as you can see here. You could be buying from there, which I did. But the better opportunities are with the selling when we manipulate the high. So this low and this high, they both get manipulated, and the one that gets manipulated the latest, which is the Asian high, dictates where the trend is going to follow. Let me change. Okay, I have a few more examples of London reversals that I will talk about in here. Alright, London close reversals are here. Alright. So look at this example of a London close reversal. We have no manipulation during the London open, price is stagnant. You see that? Okay. New York rolls around, we get that reversal or that manipulation of the low and breaks those structures. You see that? Therefore, New York created that manipulation. Therefore, what's going to happen? London close is going to follow. Alright? And now you use the daily open price to see, are we close to areas of to repel price during London close, but we're not there yet. Okay, we retraced high enough to then go lower. But I think if you got this sell here, you could have been broken even during the evening. Okay, but in this scenario, you use the 8:30 open price, and I think I did a video on this specific trade, and I think you should actually go to the Discord and check it out. I think it was the latest video that I created on 3rd of August in the commentary channel. So I think that will give you more light on this trade. So this trade was very different to other trades because we didn't get the London that manipulated. If we get the London that manipulated and then New York that manipulated as well, I'll probably be thinking of New York manipulating the highs. I'll probably thinking of selling it during London close. But the fact that London didn't manipulate, however New York manipulated the lows, then New York confirms that change of market structure here, and then London close is going to be a continuation of New York. Alright, so yeah, that's one example. Majority of my winning trades, they're from London close reversals, and the things that need to be met are, you need to be engaged with the higher time frame lows, the higher time frame liquidity points to the left hand side during London close. You need to engage with them. If the market is stagnant here during London close and is not hitting these lows, then what's the point of reversing when you could be just selling it down to those levels? You get me? So you must have engagement of higher time frame PD arrays on London close for you to have faith in reversal during London close. If not, we'll probably be doing a continuation of the London open trend and the New York open trend, okay, which are the examples I showed you. Alright, this one is another example of London close reversal. The reason is we manipulate the highs during London open, so the daily open price is around here with this. See here, daily open price is right there. Cool. We're trading in that region during Asian open price, during the midnight open price. We trade above it, retrace back down, confirming that we are going to use this daily open price as support. We're not going to use it as resistance, because if you use this as a resistance, price wouldn't need to close above it. It will literally just wick it, and then that will confirm to you that we're going lower. Okay, and the fact that New York open manipulate the lows, then London close is a continuation of the trend that was established during New York. Same situation with here. we get the New York that manipulates the lows, and then London close follows. And that's a reversal, and this is a reversal as well. The next few are going to be reversals too. Next few trades. Okay, let me go to 15-minute. Okay, so in here, both London open sessions and New York sessions have been following the same trend. With this example, we have no manipulation during London because we didn't manipulate the Asian highs, so that doesn't say anything. New York hasn't confirmed any manipulation of highs to make us think that London close is going to be following the trend of New York. So we don't have any actual manipulations during the whole morning session. What that means is we'll probably manipulate the lows, we're not manipulating the highs. And we get that as the example of London close manipulating London open, manipulating the daily lows or the 15-minute lows that are here. And this is the exact same scenario as the previous trades I told you, when you get the reversals during London close. The daily open price is around here, and therefore you use the the New York open price, the 8:30 open price, which we are trading I think below. Therefore you target the London open price right here, the midnight open price. Target that with your trades. So the only scenario where you hold counter trend London close setups is if we don't have any manipulations during London open, and we don't have any manipulations of the the buy side liquidity during New York. That's the only time. Or else what's going to happen is the new day is going to open and then it will just go low. You get me? So yeah. Here, same exact scenario. We have the Asian highs. London open doesn't confirm any manipulation. New York, I think, kind of does, but then we range around with these highs and lows, and we keep getting the manipulation of the lows during New York. Get the manipulation of the lows. Same with here, we get the manipulation of the lows during New York. Therefore, we will probably have that reversal during London close. And we're also engaging the 15-minute lows, and we're not engaging the 15-minute highs for that Judas swing during London open or New York open. Alright, the daily open price is around here. So in this scenario, you could be targeting the daily open price. Okay. And yeah, I think that's all. This lesson may have been quite intense because of the terminologies I used and other things, but you need to know that having the context behind London close comes as a result of you knowing what happened during London Open and New York. If we get Judas swing during London Open on one side of the market, then rest be assured we will probably be having the high of the day during London Open. Most of the time we will have that. Like with this situation here, we have the Judas swing lower, therefore the rest of the day we're trading higher. So that's a rule of thumb. If we have the Judas swing during the London Open, we'll probably not be reaching that level again. So stop thinking of reversing those trades on London close, because it's probably not going to work out. Same with here. You see the sell, you target this, but you don't target the lows here. You target these lows, but not here, because the reversal occurred during London Open. Alright. The only exception is if we get New York session doing a Judas swing on the opposite side of London Open. So if this did a Judas swing down, taken out some certain lows like this one, and then it came back up abruptly, then we'll probably have a reversal during New York, and then London close is gonna follow that trend. You get me? Okay. But if we get both Judas swing during London Open and New York Open on the same direction, then then London close is gonna follow that. Okay. So I hope that was helpful. And if you have any sort of questions regarding this, you can post it on Discord, and I'll be happy to answer it. Good night.